A tale of two PAAs. Yes, that's right. At the Dollar Vigilante, my white paper chat in Acapulco, Mexico, I reasserted again my bearishness on oil and my overall bullishness, super bullishness to the precious metals. This could give you a commodity delta neutral hedge when the dollar is strong and when it is weak, etc. And our primary oil short of an equity nature was PAA. Plains All-American Pipeline. You're seeing it here. If you follow the channel, you will have had many updates on Plains, calling it bearish. In fact, not just calling it bearish, our initial implementation of shorts with both options, spread bets, and a variety of other retail available tools was at the $25 mark after the second equivalent high. You'll see that there's two touches here, and they were taken and you got a little bit of a sell-off, and then you got a second attempt and failure to make a new high. We were short very shortly thereafter on that, and it is in a macro structure for downside, and we've made a prediction sub 4 that she trades. In other words, $3. How many times do you go on YouTube and somebody tells you something that's $25 is going to trade $3? Well, it's not necessarily. We can't tell you that. We're not clairvoyants. It's an on balance of probability potential event. And that is how we have it. You had an interesting return move to our key level of triggering event over here. It had a head and shoulders structure that you got a bit of a neckline, and then a target was performed to, and you are now at the point of where you are making new lows on this particular trade. So this is very bearish price behavior, and as if you want to have a look at that bigger target, you're going to need to go onto bigger time frames. So without further ado, I will give you a quick flash of the Plains short call in its entirety on the bigger time frame. So we'll take off those little annotations, lines away, and you go up to your monthly, and you'll see that it was already in quite a nasty sell-off period, and our call is in essence that this has been a large macro continuation pattern here with very steep across the tops over there. And that you're going to see further downside, and geometrically that's going to take you not just sub the double digits, but into the lower half thereof. We're talking right down there. Not good time for oil. Yes, they always told you about peak oil, peak oil. They were talking about peak oil at a supply level. There's our target, as you can see. In actual fact, for me, I think we've passed peak demand for oil. By the way, China in this coronavirus environment is well over 20% down on the normal oil consumption. Things are just coming to an absolute halt. So economically, the supply chain is being disrupted. Oil, once again, will be hitting this headwind, repeated headwind. And it's amazing how the technicals, you see them in the technicals, and the narrative comes to meet the technicals. Major headwind for economic growth, with the workshop of the world being turned down in terms of its power to deliver goods for the rest of the consuming world. So that's PAA, and I said it's a tale of two PAAs, because also this is the bear side, the precious metals bull that we have been reasserting. If you look at the same videos, you will see that in actual fact we have been reasserting bullishness on precious metals. Precious metals reassert. There you go, 2020 final. That was a month ago. That's the falling wedge that's broken out. By the way, gold, new time highs for the last 7 years, through 1600, through 1500 euros. It's all happening. Yes, indeed. So gold is turning down. Gold's turning up, sorry, and making new highs. Hence, oil is looking weak, and oil-based equities are looking weak. So what's the big bull story, which was also the PAA? Well, it is PAAS, Pan American Silver Corp. So as I say, as a member of our community, you'll get to see all that we're looking at and why we're looking at it and how it could be interesting. Pan American Silver, PAAS. So it's a PAA of different nature and name, and is looking exceedingly bullish. By the way, for those on a technical nature on candlesticks, this has a pump and then a rest and then a pump. some might think it's of flag. It's more kind of like a 3 rising method. If you had a 6 monthly chart, each candle was 6 months, you probably get 3 candles up, a drifting 3 and a pumping 3. And the traditional technical way is to buy the takeout of the top. Better still for me to be in early. That's traditional technical analysis. As I say, we have setups within this on shorter time frames, but you can see how in the 2011 period when silver hit highs where it's been, my suspicion that is that in 2008 a lot of damage was done to the company here, that it failed to make new highs on the big bull market that I think will probably be ironed out this time around. So it's a very interesting play. By the way, so what was the structure? This is also on a monthly chart. The structure we liked was actually on a smaller time frame. I think we're down in a 4-hourly here, and we've put this through. If you're following on Twitter, once things are broken and our premium are properly set, you can still get a little idea about what we're looking at. That's what we're looking at there on that structure. A beautiful break. Unsurprisingly came on earnings, this one. So prior to earnings, actually, someone got the earnings sheet. I'm seeing so much of this. I mean, I did a YouTube just yesterday on Apple calling the low with their revenue concerns announcements. The previous time they did a revenue won't make it. They've recently just done one again. So I'm expecting it's almost code for the insider cartel in the Israeli investing community that time to buy the bottom. And in the same way, this earnings announcement that came, you got a massive move with volume prior to it. So let me just take that line off and click the earnings announcement there. You will see that in fact earnings came in ahead of estimate, and in actual fact the market pumped before the earnings. 18th February. Where are our, so if you're not part of the cartel, you'd be investigated for insider trading, for being heavily long here. If you're a officer of the company, getting in long heavily. Let's put that volume on. I'm guessing you're going to see quite a bit of volume. By the way, this is a shorter time frame. This is on the 4 hour, but that's for the same concept. We are relative to the PAA, which is a really macro trade when you're looking for $25 to trade in the threes. I'm expecting similar scale moves. This is one of potentially many continuation charts on shorter time frames that will continue to form in an ever increasing bull market. And the truth of the matter, in my opinion, is that silver is yet to get into any form of a manic stage. It is still within the rising wedge of the XAUXAG ratio, and we're looking for that to spill to the downside for the further bullishness. I'll give you a quick view of that, some drawing we're doing. That's the wedge, the lines up top there, that you're still constrained by. You did have a little nosy dip on the bigger time frame, that's just a wick, but this is how you sell off when you sell off. And then this is the grinding, maintaining. So silver's doing enough to keep this just marginally going up like that. What will be interesting, grind line, is when we fall out of the half, get here, and then properly spill, because then you'll have both gold and silver running like the beasts that they will be in this fakery and fiat world that we currently have. So back to the Pan-American silver. This is a PAA by different name and nature, PAAS, and it is done nicely and is still a further upside target, and I would expect it to continue to generate positive upside. So that is your gold and silver story, guys, and your oil story. We owe it to ourselves to show you the oil price, so we'll go and have a look at WTI. It did get a bit of a rally bid about a week ago. There was a little bit of a push up for you. Don't pay no attention to the volume here. It's a little bit futures market-ish, a bit patchy, but you can see that you got a big push up right here, but it's all in vain in my view. I think we will see further downsides. The bigger time frame setup and structure is very, very weak. In other words, we had a bit of complexity in this impulse here. So you can see there's a bit of a dent in the head. We've run this kind of blue level, which is protection 52 a little bit, but we're on a vicious grind line on the bigger time frames, and I'm anticipating to see that this does a visit to the downside, and that's going to be very painful. So what could happen? Quick little draw, little bit of fake rally, get all the suckers back in long, drift in here. There's a decision time not too far ahead for oil, and guess what I'm saying? Visiting down. You could even trade in the 20s, possibly sub 25, maybe even sub 20 in the oil if it gets disorderly. How did we trade through the worst economic depression, everybody? Low. Well, oversupply and fracking. By the way, fracking tech is getting better, so they're going to keep pumping supply. America's independence from oil need is what's made the market disorderly. You now have China that's consuming less oil. This coronavirus is not a welcome event for the oil market. Okay, so we've taken a fly past a couple of things. Finally, I'm going to throw a little wild card in there. You might say it's got nothing to do with PAA and PAAS and the gold and oil market, but there is one common denominator in the gold and oil market, and that is the dollar. We did our non-farm day, and we took longs in the session live while we were doing it. We actually trade at 5.985. And a number of our community members and a few people that paid and attended a non-farm day just to see what we're all about. We do that, you know. If you want to make an investment, why not see what it's all about? And we give opportunity for that because we're pretty much what we say we are. And you can come and check it out, and if you like it, you can become part of it. So this was the non-farm period over here. In fact, I've done an annotation over here, one of these. Let's have a look. Let's grab it and show it to you on a nicely drawn chart. This was our break on that particular non-farm day. So you can see over here we went long. You can see the central bank, oh, they give it the game away. By the way, on a bigger time frame, there were many more touches to the left. You can see them trying to protect their 6 mark. Oh my God, and they don't protect it at 6, they try to protect it just before 6. And then it leaked. That was non-farm payroll day. It leaking through, popped up. Then you got the light volume on a Sunday. Remember, non-farm is a Friday. You got a light volume on a Sunday. What do they try to do? They attack to try to defend their currency and smash it down on thin volume, and they can bring it back to the level. Sorry, you can't fight nature forever. If there's buoyancy, there's buoyancy, and up she goes. Now in a channel, quite well-established channel, and a bit choppy part there, and very low vol drifting up. And we said channel range test may bring intervention gain or a sell-off of the dollar again. So the likelihood you're probably going to stay in the channel. And if we pop over to how it turned out for this morning, you can see, boom, there are your little channel test and the resistance for now. So we are in a low vol grinding upwards channel that is fairly high ascent, by the way. So since our non-farm entry, when you're at the top here, you actually had 14% on this currency trade, guys. That is pretty huge. You have to do the euro Swiss franc floor fail to get 30% in a couple of hours. Those don't happen every day, but central banks were involved there too, the manipulators. So pretty wild returns on that one in terms of pips. Nice little ascending triangle at the key level where they were trying to defend just before the key level of significance. Now you get a bit of a pushback. It might be calm. Dollar might rest a little. I think maybe Fed speaks, the chief Satan. So lots of interesting things going on there. So if the dollar rests a little, what do you think it's going to do for your gold? Well, it could put a bit of support under your weak oil, which will give you that third little bump that I was saying too, that fake little sucker rally for the bulls. But it's also going to be extremely supportive for the gold. So let's just show you the gold. And as I say, guys, you've got to not make an investment to learn how to trade when the returns could potentially be vast on that investment. There are trades here you're potentially missing. because you haven't committed to advancing your skills. Learn the skills, become a better trader and chartist, and then the money comes. Chase money and the money runs. Chase skills, learn to love what you do, become a chartist, see what the footprints in the sand are telling you. This is the money flow. Everyone always tells you, follow the money, but nobody knows how to follow the money. I'm here to tell you how to follow the money. I'm here to tell you how to follow the money. Nobody knows how to follow the money. No one's going to send you a telegram. Hey, so-and-so just sent a couple of $100 billion to buy this stock. You just don't have those kind of friends, I'm afraid. I don't want to bring you bad news. I'm not the bearer of bad news on a Friday. I don't want to be that guy. Here's an ugly HVF. We were watching it. We were monitoring it. We felt the macro is a bull. We called the macro bull at 1350. You've just made the HVF target, guys. You've just made the HVF target. It's just run the damn target. By the way, is it over? No, I think it might have a short pullback. You've got an inverted head and shoulders from when we called the bull waiting to be made. We've got a cluster of zones. There it is. There it is. So, do you know how to chart and pattern properly? Do you think you can monitor all the markets and have done all the charting and pattern properly? Why not be part of a community that's already doing it? No, I don't want to spend money. It's money out of my trading account. Oh, but you blow your trading account all the time and you're leaving 30 grand, 50 grand, 100 grand trades on the table because you don't want to invest. All right, thank you. You're not ready to learn. That's what you're telling us. Okay, so that's the story. So wake up, book a chat. If it's for you, by the way, trading isn't for everyone. I'm not trying to make it out that it isn't for everyone. But are you net long precious metals? Are you net long? Do you have options and spread bet positions and CFD positions on good silver miners? Are you just sitting here and making some money, or are you just thinking how to do it, chasing 10 different methods, flittering around, never deeply penetrating in the very best one, and being a specialist at doing one thing really well? This is turning into a rant. Look at him. Wow, and I haven't even had my coffee yet. Okay, but grow, guys. Come on, grow. Don't sit watching free views on YouTube. Start doing it. Start making the money. It's already deep into January. We're in February. The reset is coming. Emerging market FXs, I'm showing you, are failing. The rand will be next. I'm giving you some of the trades, but you still won't make the money because you don't have the skill sets and the confidence. And the way you get the skill sets and the confidence is you invest in yourself and you make mistakes in front of other people who have your interest at heart and will say, maybe that's not a good draw, maybe that you get this, don't forget that. And you learn and you grow. Trading is a personal development program. Money flows to those who value it, who have shown a development of skills. That is where you go. Anyway, so there you go. Cluster of things. We said it here. We drew all this. We drew all this in June. We were drawing, and it's come to be, guys. You're looking at the last snail's breadth to be finished. It's come to be, and you could have been leveraged long. If you aren't, you've got to ask yourself why. Confidence. That's why. Why don't you have confidence? Because you haven't practiced. Why aren't you practicing? Because you don't know what to practice. You don't have an environment that's safe to practice in, and you don't have anyone giving you mentorship and feedback. Okay, so here we go. I've got to stop this. I'm getting psyched. I'm gonna start playing the Rocky theme tune. I'm even wearing the long sleeve shirt under the short, that sort of American thing, and those joggers. I'm gonna run up the stairs here in Portland, and I'm gonna jump up and down. I'm gonna say, "Hey, all you transgenders! Hey, all you feminazis." No, I'm kidding. They're lovely people down here. But anyway, time to let you go. I'm going in all sorts of tangents. Have a great day. Decide, is this the year? Do you want to profit out of the reset, or are you going to be part of the guys that are going to be laid off from your job, no idea what to do next? Contraction, fear and loathing, 2008 Mark II, even worse, banks closing and not offering, allowing you to do much withdrawals. There are things afoot, this coronavirus, I started off saying nothing burger, it may well be, but I can tell you what, they're going to do a proper job of destroying the Far East Asian nations' economy. There's companies not getting their salaries, payroll met. This is really troubling for a number of Asian nations. Apple supposedly saying supply chain. I don't know if they all play acting. They're such scammers. But if you get horrific economic growth numbers out of the Far East, what do you think that does for their currency? What do you think it does for our call about the Far Eastern currencies leading a fail of currencies that could be 1997 again, which was the great Asian currency crisis? That could lead into all emergings for which we already have Turkey popping out ahead of the game. Could this be part of the macro? This is the reset sniper talking at you right now. Guys, Don't sleepwalk into this. It's how you boil a frog. The water's getting hot out there. You know, if you just keep simmering there with your little froggy eyes at that water level, thinking, yeah, it's kind of dandy here by the geyser, bit of steam popping out, isn't it lovely? You're about to get boiled, and they boil you slowly. It's happening. This is a glacier slipping, and it's slipping down. Where's Greta when you need her? Okay, I'm off. I'm talking too much nonsense. God bless you. You got to learn. Book in for a call. Otherwise, just grab the Freeview stuff. If you don't know what we're about, come and come and check a non-farm payroll. Those guys are sitting on 16%, 14% on a emerging market currency trade. Bye for now, and I will catch you all later. Final appendices that I forgot to mention in all of this. Don't forget, we work with a very good broker that I checked out personally, went to Sweden, Stockholm to see, Scandinavian Capital Markets, loving using the C Trader actually on them, not old cranky MT4, nice, easy to use, shows you your trades, quick to move, give you up to 100 to 1 leverage on your FX trades, yes, including on the lira. Plus you can trade gold against the euro, not just the dollar, and other very interesting pairs, all with significantly higher leverage. All your precious metals are on it too, with a lot of your exotics. There are big things happening in the FX, gold and silver markets, and those are the crowd that I've elected to use. I use them myself. I will not put anything forward that I'm not utilizing and happy with myself. If I'm utilizing it and I'm neutral on it, I will not put it forward. Happy to put it forward. There's a link below. Don't forget to use it, guys. Whether you choose to do a program or course or not, I do get recognized a small amount for it. It's not embedded. You have very, very tight and good spreads. Western European standards of officiate, very, very well, tidy place. Sweden, just amazing place to visit. Went in summer, enjoyed it immensely, but outside of the limitations on the leverage, which everyone in the UK, everyone in France, Germany, etc. Faces. So you get the decency, you get a good regulated environment, but you get a little bit more freedom as well. Remember, leverage can hurt, and none of what I say is recommendation, it's entertainment, but this is how I have chosen to implement for myself. And if you do get some value out of this channel, you do, and you take a trade, I get a small recognition, and I'm grateful for that. Thank you very much, guys.